Hi, Judy Fitzpatrick here at Canada Smart Plan. In this video, we're going to talk about the difference between Canada Smart Plan and the Private Health Services Plan, which is what we provide for you, and the medical expense tax credit. Now, most people are told by their accountant, all about the medical expense tax credit, and basically, you give all your health receipts to your accountant and hope that that's somehow going to reduce your tax burden. So let's understand the difference between Canada Smart Plan's Private Health Services Plan and the medical expense tax credit. In order to understand that, you need to understand the difference between what's going on here. A tax credit is something that is applied to the actual tax due to reduce that tax burden, where a tax deduction reduces the taxable income. And so the result is a lowering of taxes. Well, okay, so that's the difference. Medical expense tax credit is a credit that will reduce your tax burden, where the Private Health Services Plan is a tax deduction you use in your business to reduce the income and receive a tax relief as a result of it. So with the medical expense tax credit, you get credit on the lesser amount. Well, first of all, you have to have either an overage of $2,152 in expenses or 3% of your income. And then what amount of health expenses that are over that, you get a tax credit. And that tax credit will be based on the lowest provincial tax rate. So say 25%. So for example, if you had a $2,500 tax or health expense, and so $2,152 would be the threshold you would have to go over in this example. So say $350 is the amount that you get the tax credit for. So 25% of that would be how much you would reduce your taxes. Okay, so 25% of say $350 is what, about $80? I don't have my calculator out. So you've saved $80 in a tax credit. So your personal tax has been reduced by $80. Okay, $80 is $80. Okay, but a private health services plan is a deductible expense for your business. So if you're a business owner, self-employed professional, you put this plan in place and it lets you write off all of your personal health expenses against your business income. Okay, so you have that same $2,500 in health expenses. You submit those through your private health services plan. Your business simply reimburses you for them. The business gets to write off the full $2,500 against the business income, thus reducing the business income, and you are reimbursed those health expenses personally. Okay, so if you had paid for those expenses personally, which you would with health expenses, you would have had to earn first, pay taxes on those personal earnings, and with what's left over, you pay those health expenses. By doing it this way, you don't pay any taxes on those earnings, therefore saving taxes, your personal taxes on those earnings. So if you were in just a 35% tax bracket on a $2,500 expense, it would have saved you about $1,000 versus the $80 for that medical expense tax credit. That's why if you're a Canadian small business owner or self-employed professional, you will use the Private Health Services Plan to save you the most money. Forget about the medical expense tax credit. The Private Health Services Plan will save you way more money. It's much smarter to do. And you can register it for absolutely free at canadasmartplan.com. We look forward to serving you.